what we're all about at Delta.
It's who we are.
This is who we are.
This is who we are.
This is who we are.
Here I am at the charging station, and look what we got here. We got a Wagoneer S right here. This is the first one of those I seen. Wagoneer S here at the charger. Man, that thing's, it's really not as big as, I mean, it's not big. It's not as big as the 4xe Jeep Grand Cherokee. It's not as tall, but it's really interesting to actually freaking see one here at the, the charger right here. So I got a little while to go until I'm done, but I was gonna go over and talk to this guy and ask him about his Wagoneer right here and how he enjoys it so far. Yeah, it's great. I looked up in my rearview mirror and all of a sudden I just happened to see this guy. Good morning, it's me tuning in once again. I basically wanted to pay a very quick visit to Micro Center to see how many people were ready to got for that 5070 Ti. As you remember, I last made a video showing how I came here before to see the 5090 lines that were, people camping out and lined up. But it appears that there are no lines. It is 10:34, so I'm assuming whatever sales took place must be over. So I'm going to definitely walk in there. I just want to see if, the shelves are still empty as they were before when I came here. I'm so glad I got my 5090 because I'll tell you, I'm looking at these prices on eBay, and these things are going for like 5,000, 6,000. Like, it's just ridiculous. It's like, who would be stupid enough to pay those kind of prices? Anything above MSRP and you're getting got. But I just want to go in there. I just want to take a look at their shelves, and I just want to see what they look like. Well, I guess the 5070 Ti launch, I guess they're all sold out, I suppose. You have a couple left, really? But no 5090s, no 5080s? How many 5070 Ti's do you have? I know you're only allowed to buy one, but I'm interested. How many people came in this morning?
I don't know.
I thought there was going to be a line. And what are the prices, though?
So
are they overpriced or what?
Yeah, they are. Yeah. The one that I have right now is 1,000.
Which one's that?
It's an Eastern
Tough.
So I have 6 left. We had 82 of them, so about 76 people came in. Well,
And you said you have like 6 left?
I have 6 right now, yeah.
Of this model?
Yeah, that's the only model I have.
Oh, okay. Yeah, I had gotten a 5090 already, but I wanted to see that.
Yeah.
Yeah, and by the way, you have the 285K, right? What's the price on it? So here we are. It is President's Day week. And, there's a lot of us who are on vacation. And some people did have, of course, Monday off. But there are others of us who are pretty much off all week and enjoying the vacation, midwinter recess, you might consider it. And I see this news. It says gas prices are headed higher and a ripple effect could make it worse in certain regions. Now, first of all, we're in winter, and I know, as I've said this a million times, but gas prices typically are going to be lower in winter simply because we use different fuel blends, which are designed to produce less nitrous oxide. Ultimately, you expect gas prices to go down in winter. In fact, during the winter, fewer people are actually traveling, mostly because of the snow and the ice and whatnot. And because less people travel, that for the most part causes automobile fuel to go down. The demand basically goes down. Now, that can't be said about home heating oil. Home heating oil goes up. So obviously you use more home heating oil during the winter than you would during the summer. So this is one of the reasons why I'm still an oil man as far as owning oil stock. I don't buy it as much as I used to. I think I've already mentioned I've switched to credit cards in order to get dividends, but I still hold oil stock. And the reality of the situation is, it's like I'm not worried about these gas prices. Like here they're talking about in this story, it says on Wednesday, the national average price for gasoline hovered around $3.16 per gallon. That's 0.04 cents higher than a month ago and 11 cents lower than exactly 1 year ago. So I guess you could say that gas is slightly lower, but I'd say at $3.16 a gallon, that's still pretty high. And I've said this before, I don't want to hear anybody say that gas prices are lower until we see gas go back to like $1.99. Because as far as I'm concerned, this is like somebody punching you in the face every single day, and then one day they don't punch you in the face, they just give you a light slap. Just because they gave you a light slap doesn't mean that things got better. It just means that, they just didn't punch you in the face. As far as I'm concerned, no, these gas prices are abusive. And I do know that, Trump was trying to force the Saudis to produce more oil, but the Saudis aren't going to overproduce oil because obviously that causes the price of fuel to go down, which means that their economy actually takes a hit for that. Even if we, benefit from it, they take a hit from that. Says the national average has inched higher, driven primarily by sharp gas price increases on the West Coast, where refinery maintenance and outages have created a ripple effect in neighboring states, pushing prices higher in many communities, said Patrick DeHaan, head of petroleum analysis at Gas Buddy. So they're showing this map right here, as you can see. So they're showing you $3.80 or more. So Californians and Washington State, they're paying. Also I should mention Oregon. They're paying, what is it, between $3.40 and it looks like probably up to about close to $4. But they're the ones in the red. Now, if you look where New York is, they say we're at about $3.10. And they show some parts of the Deep South. The Deep South seems to be at about $2.89. I guess that's not too bad, but I assume that that's just regular unleaded. That's not talking about premium unleaded. And as far as, premium unleaded, you have to have that if you're running these V8 engines or if you're running some of these turbocharged engines because they demand high-octane fuel. Otherwise, they cause knocking. So it's like you may be in a situation where you don't have a choice but to use premium fuel, and you're going to pay top dollar no matter what. So what did they say? It says refineries have been undergoing planned seasonal maintenance, putting pressure on supply, meaning a February 1st fire at the Martinez refinery in Northern California forced the shutdown of nearby all its units. The outages come ahead of the annual switch to more expensive summer fuel blends, with Western states making the changeover first. Okay, so the Western states will change to the new fuel blends for the summer. They'll change first, and then that'll gradually work its way towards the east where I am. California already has the most expensive gasoline in the U.S. due to fees and taxes tied to green initiatives. Gasoline averages in the Golden State jumped 41 cents over the past month to $4.85 per gallon, about 20 cents higher than a year ago. Washington State also saw prices at the pump jump roughly 22 cents over the past month to $4.15 per gallon. Meanwhile, Nevada's 1 month increase of 23 cents has the state's national the average hovering at $3.89. So they're showing a grid from 2020 to 2022 where we had like the spike of average gas due to the Ukraine war and the Federal Reserve raising interest rates. And now they show us at, 2025, we're at 328. So that graph right there is good for historical reference. So, yeah, you're about 328 right now. Let me see. There's nothing you can do about it, but I don't think they really recommend anything. So what they do, however, with Yahoo Finance, and one thing I like is they talk about some of the crude oil stocks that you can buy. And me personally, I mean, you could buy crude oil stocks or you could just buy gas companies. BP, Sunoco, Texaco, Shell, Chevron. It's easier to just buy those, but, they do give you information about others just in case you're interested, because they say a barrel of oil right now is about $72. But a barrel of oil, the price of a barrel of oil could go right back up to like $90, depending upon, the situations down there caused by these fires that they've had or these supply disruptions. So, okay, so that's about it with oil. So, hopefully you're not in a situation where, gas prices are a really big deal for you. But this is what it is. So what is this? It says traders have recently been assessing the impact a potential peace deal in Ukraine could have on the markets if Western sanctions against Russia are eventually lifted. And that is actually that's something, that you really got to think about. I've mentioned this just about every time I've talked about stocks. When we put those sanctions on Russian oil, you got to remember we had cheap Russian oil coming into America. And I believe the actual count, like I had the numbers, but it was more than 600,000 barrels a month. And it was cheap Russian oil. And my thing is, Biden put those sanctions on Russia and it ruined everything. And that's basically what caused those gas prices to spike back in 2022, basically. And if Trump does do a peace deal with Russia, and if Trump does lift those sanctions on Russia, then that could absolutely drop the price of gas again. Now, the Saudis may not like that, but I really could care less what they like. So the thing about it is I would like to see that happen. I would like to see gas prices go down. But we'll just have to wait and see, because right now we just don't know. They say if sanctions on Russia are eased, that certainly could put downward pressure on oil. And of course, President Trump has promised to lower energy prices. So there are huge implications. And then I think it pretty much starts to taper off. I don't know. It's like these things are written by AI or something. It says in a note earlier this month, Goldman Sachs said prices could fall in the medium term because persistent broad tariffs could weigh on global GDP and oil demand. And yes, that's true. The Trump tariffs could be an issue. Of course, it's always possible that Trump might not put tariffs on oil simply because, and one of the things I've heard Trump say, and he believes, the mere fact that I've heard him say it, he believes the fact that energy prices are everything. So if you have cheap energy, it makes it so everything else is cheap. And he is right about that. Energy is the ability to do all work. So if he were to do a peace deal with Russia, if he were to lift sanctions on Russia, and if he were to allow Russia oil here without tariffs, that could turn the price of oil around. Now, my recommendation to you, especially if you buy into oil or gas stocks, especially if you're trying to build up a dividend-paying portfolio, I would just go after the main gas stations: BP, Chevron, Sunoco, Exxon, Texaco. I would just go after those. If you just buy those and you hold them, you get easy dividends from them. And, it's not very complicated. And you can buy it, you can hold it. Gas prices go up, but they as we saw, they don't go up to the point where nobody can afford gas. But they can make you a lot of money, especially if you buy into, some of the oil mining companies that, I showed before, which I'll try to probably revisit a little bit later. I keep thinking back to my friends who I tried to tell them to buy a house. I kept telling them, I had friends, I had certain family members. I told them, I was like, yeah, you should buy a house, you should buy a condo, you should buy some piece of property that allows you to build equity. And they didn't do it. And they didn't do it in time. And now I believe we're at a point where they may not have that option at all. It is possible to buy a house. It's just that you're going to overpay on it so much that just owning it is going to just be a pain. It's like an overpriced pain. So it says Federal Reserve officials see risks of higher inflation ahead. Support pause in rate cuts. The Federal Reserve is ultimately the reason why we have inflation. They kept us at 0% interest rates for far too long. And by doing that, they allowed inflation to rise. See, what a lot of people don't seem to understand is inflation doesn't mean the price of items goes up. Inflation is when the government prints money and it causes the value of your money to go down. And if the value of your money goes down, it means now you need more money in order to be able to buy whatever it is you wanted to buy. And that's what you're feeling. You see it as price inflation, but the reality is your money is worth less than it used to be. The Federal Reserve was telling Trump that, he could talk as much shit as he wants, but the problem is Jerome Powell is somebody that Trump can't touch. He can't fire him. He can't touch him. Now, I have no idea why that's so, because I have no idea how America could allow an unelected and unaccountable government within a government to be built like that. But the simple fact is, Jerome Powell doesn't have to do anything that Trump says. And I think that Trump understands that, because it's funny. I was listening to Jerome Powell deliver a speech, and somebody asked a question after he was finished about Trump pressuring him to lower interest rates. And he was like, yeah, we're not even going to talk about that. So he basically dismissed all those questions. And he doesn't have to answer any of those questions, because the simple fact is Trump can't do anything to him. So if they're talking about pausing any possible rate cuts, basically what they're doing is they're letting you know that whatever you see right now in the housing market, whatever you see right now in the auto market, whatever you see right now in the credit card market, because those are really the three main things that they affect in our lives, which, strangely enough, those are extremely big things, because most people finance houses or finance cars. Those are the two largest investments that we pretty much make. They have a lot of influence, and the issue is, it's like with the interest rates where they are, there's a lot of things that we can't buy, or you can't possibly afford to buy, because the interest rates are so high. And then on top of that, the price of what it is so high. So anyway, it says the Fed's 19 officials who participate in its interest rate decisions indicated that they would want to see further progress on inflation before making any further cuts. They kept the Fed's key rate at 4.3% after cutting it from a two-decade high of 5.3% late last year. The Fed's pause makes it less likely that borrowing costs for consumers, including for mortgages, auto loans, and credit cards, will decline anytime soon. Now, here's the thing. They already know that they can't rapidly cut interest rates. If they did, they would have what's called a reverse mortgage crash, because if they dropped interest rates very quickly, then that means that people would actually raise the prices that they're asking for if they're trying to sell their houses. Because if they drop rates, that means more people can apply and more people can get granted credit. So if more people now are able to increase the demand, then it's easy for you to increase the asking price for your property because now you're going to get more people coming at you. So they're not going to do it. As far as auto loans, yes, decreasing interest rates kind of does help us when it comes to buying cars. Unlike houses, cars are in abundance. Like, they can make cars easily. It's houses they're not. They've chosen absolutely not to make houses because I believe they want to keep the housing prices exactly where they are. They want to keep rent exactly where it is. Rent, they're going to keep it high. They want to do that. And they're unapologetic about it. Now, as far as credit cards, of course they want to keep credit cards high. Like, again, I use credit cards for just about everything, but I pay off the balances so that I never pay interest. I never run a revolving balance. That's why I have an 850 credit score. That's why I get rewards points for my next vacation. Like, the next time I do a big vacation, I get as many reward points as I can and then cash them all in. The bottom line is I refuse to pay these people interest. And, I've tried to show my entire family. I'm like, yeah, this is how you have to do it. This is how you have to game the system. The bottom line is they'll charge you 28% interest on whatever you buy. And now, because groceries have gotten so expensive, you got people shopping on their credit card, running revolving balances for groceries. It's ridiculous. But a lot of people don't understand the credit card game, and they don't understand how much money they're losing to inflation or to interest. They don't understand it. So, interest can be avoided. Inflation may not be able to be avoided, but interest absolutely can be. It says the Federal Reserve maintains the interest rates. Yeah, they show this graph right here and everything. Some of this stuff, I have to wonder if AI is writing this stuff. I have to wonder. But for the most part, that's the story. It's like once they tell you whether they're going to cut or raise interest rates, that pretty much tells you what to expect. So that's all you basically need to know. And then when you look at the comments, you see all the upset people. It's like, hopefully the Fed will act in a timely manner to increase interest rates when they see inflation ramp up. Unlike last time when they said it was transitory and was 15 months too late raising interest rates. Listen, that whole thing about raising and lowering interest rates, that wasn't the problem. The problem was that they shut down all of the businesses, had everybody stay home, and then started printing welfare checks to keep them from killing each other. They were sending us welfare checks. We were doing nothing. We were producing nothing. And they're sending us checks. That was the problem. The problem really wasn't raising and lowering the interest rate. They could have kept us in 0% interest rate even longer had COVID not happened. And also, I should, what was it? The interest rate, the prime interest rate back in, 2018 was about 4.75. And once COVID hit, they dropped that shit to 3, so they could have kept the interest rates low, but the problem was they had printed so much money. And by printing all that money and adding trillions onto the national debt, oh yeah, that's that they created inflation. That's what they did. That's what they do. So basically, they create inflation, and then they say, "Oh yeah, well we're not going to lower interest rates because we want to fight inflation." It's a joke. It's a sick joke. So what is this? How about executive orders to stop funds, large investment groups, corporations, and flippers from buying single-family homes? You know what? As much as I would love to agree with that, the problem is that's not constitutional. Corporations have been ruled to be people by the Supreme Court because from what the Supreme Court sees, if you have a large group of people get together and they believe in the corporation and they're putting money into the corporation, then technically that signifies the will of the people. So if that's how they want to interpret it, fine by me, because they're Supreme Court justices, I'm not. But the bottom line is it wouldn't be constitutional to disallow, investors, from buying single. It wouldn't be constitutional. Like if you start passing laws like that, then America becomes a very different place very, very quickly. It's sad because the more and more I see, with these people, because a lot of these people are communists. A lot of these people in their hearts, these people are communists. A lot of these people don't believe in capitalism because they ain't got nothing to offer. A lot of these people don't believe in capitalism because they're not witty enough to actually work in a system of capitalism. A lot of these people are lazy as fuck and they don't want to work. And that's the reality. The best way I can say it is to say it just like that. A lot of these people are lazy and they don't want to work. They want shit given to them. They want everything that they want when they want it. And they don't care if they have to take it from somebody else. That's the key. They don't want to have to physically take it from somebody else. They want the government to take it and give it to them. That's called redistribution. A lot of these people are goddamn communists. And that's the reality. That's just the reality. But Doge is they're on the prowl right now. So these people got bigger problems than they could imagine. So it's like, interestingly and aggravating, the minutes omit by far the biggest inflation factor, namely the federal budget deficit and the role of renewing the 2017 tax cuts. Could this be because the Fed's operations interests on bank reserves are contributing materially to the federal deficit? Okay. How can the Fed think that they have any credibility going back to their transient inflator forecast? And let me just say this, reading this comment, something just popped into my mind. Jerome Powell should not still be there. How is it possible that you've got that one guy who's been there all this time, despite the fact that he was saying that the inflation was transitory and this, that, and other? It's like, how is it possible this guy is still working? Like, that's my bigger problem. It's like, he shouldn't still be there. You're right. He has absolutely no credibility. The guy's lying to you. And, you get somebody like Peter Schiff who does his videos constantly pointing out the fact that he's lying and pointing out how he dodges questions. But the fact that he can't be fired, I consider that a huge problem because the guy has no credibility. He can't be fired, which oddly enough, even Trump can't fire, which is just, that's just, you wouldn't believe that that's possible, but yeah, it's possible. He can't, if Trump can't, first of all, the Federal Reserve does not exist within the bounds of the Constitution. We have an executive branch, a legislative branch, and a judicial branch. Where the fuck does the Federal Reserve come in? I understand that a president can't fire a Supreme Court justice or can't fire a congressperson. But who the fuck is this guy, Jerome Powell? Who is this Federal Reserve chairman? That's the question you really need to ask yourselves. But here we go. So anyway, it says translations. We helped massage the inflation numbers the last 2 years to help Biden. Everyone knows inflation wasn't 2.5% in 23 and 24. Now that Trump is in office, real numbers will slowly start to emerge, showing the true inflation rate is probably 4+, somewhere above 4. Putting Trump and his loyalists in charge of the FDIC and banks, what could go wrong? They already cut 200 bank examiners and talked about gutting the FDIC. Credit card debt and delinquencies are at record highs. So the risk exposure for banks and lenders is almost higher. We could easily see another 2008 meltdown again with smaller and regional banks. And this is probably where I'll stop. This part where he says we could easily see another 2008 meltdown again. Let me just say it like this. I could take you back to that time, 2008. I was working in banking, and I was actually selling mortgages and refinancing people. And the cost of houses was sky high. If you look back, you could, here in New York, the cost was sky high. Now, I was looking at buying a house with my family. We were looking at buying a house where was it? Well, we were looking at buying a house anyway. And the person who was selling it at that time wanted like 525 or something like that. I think it was 525, 550, something crazy, one of those numbers. And that's what you know. What's funny here in 2024, $525,000 here in 2024. That's actually reasonable because they wanted 525 for what ultimately, because of the crash that came after 2008, we ended up getting it under, what was it, under like 300,000. It was like less than, it was less than 300,000. But now in 2024, that same house would sell for more than $700,000. So if you think about it, back then, 525 was unthinkable. Like let's say 525, 550. A lot of houses back then were selling at that rate, and those prices were ridiculous back then. Now this is 2008, but because the market crashed, and it was a sudden crash in 2009. By like between 2009 and 2011. We were easily able to get the place for half of that ask, or almost half. But now in 2024, that same place is like 700. The developers, especially like this person in this comment, that's like, oh yeah, well, you got to stop the corporations, you got to stop the investors. That's not constitutional. For instance, right now I have a single family house that I'm in right now. I'm sitting under my ceiling fan. I love my ceiling fan. So if a developer or an investor or a corporation comes to me right now and says, and by the way, I get these offers all the freaking time. I was sitting in my car and I got a phone. This was like 2 days ago. Sitting in my car, I got a phone call from some unknown number, and the unknown number, I pick it up. I'm like, yeah, hi, who's this? And they're like, oh yeah, well, we were just wondering about one of your properties that we have listed here, and we were wondering if you were thinking about selling it. I was like, no, I'm absolutely not thinking about selling it. Thank you very much. Have a nice day. And I hung up. Not only that, I get these fucking things in the mail all the time. These people come by your house and they just drop stuff into your mailbox, or they leave stuff on your fence, or they leave it in your door. And they're like, oh yeah, you interested in selling your house? It's like, no, I'm not. If I was interested in selling my house, I'd have a for sale sign on the front of my house. But here's the bottom line though. I get these offers all the time. But the thing about it is, it's unconstitutional to try to lock companies and corporations and investors. It's unconstitutional to lock these people out of offering me money. Because you got to understand, if I was going to sell this place, I would have to make enough money from it to be able to move somewhere else. So by you, and this is why I'm telling you, a lot of these people are communists. By you trying to limit the people who can offer me money for my property, what that's doing is saying that you're limiting the amount of money that I can earn selling my property. This is my property, not yours. Let's understand this. This is my property, not yours. So if BlackRock, people are, oh, BlackRock is mean and evil and they don't give a shit about single. If BlackRock comes to me right now and they're like, yo, listen, how much do you want for this place? And I'd be like, nah, I'm not even going to tell you because it'd be some bullshit number and you're not going to pay it. And they'd be like, listen, how much do you want for this place? Okay, I say, okay, yeah, give me $3 million cash and we're good. Be like, okay, $3 million, you ready to sign? I'd be like, what? $3 million? You want me to sign? Nah, you're bullshitting. I'd be listen. And they'd be like, listen, you said $3 million. Are you ready to sign? And I'm like, yeah, please, show me that shit. Let me tell you something. I'd be up out of here so quick if you gave me $3 million cash, I'd be up out of here so quick. I'd let you keep all the shit that I got in here. Like, most of my stuff, I really don't even really care about. It's like, I would take my collections of stuff and my computers and stuff. I'd take all that stuff out of here. Man, the furniture, you can keep it. I can give a fuck. $3 million, shit, I'm out. But if it was a single family coming to me and offering me money for this place, they wouldn't be able to pay much more than the fair market value. Now, the fair market value on this place in particular has gone up by double. So, yeah, if I were to sell this place, that would give me a very nice chunk of change if I had to sell to a single family at fair market value. But maybe I don't want, maybe I want more money than that. You know, like maybe I want to be walking around a millionaire. Maybe I want to retire to the Philippines or Thailand and have some young wife rubbing coconut oil on me and hand sipping me some buko juice. Maybe I don't want to have to just get just enough money from a single family. It's unconstitutional. That's the bottom line. And there's some people who have property and they understand what I'm talking about. There's some of y'all who don't have shit and you don't understand what I'm talking about. And then there's some of y'all who are communists and y'all just want to take from everybody else and steal. So the bottom line is I'm not even arguing with y'all because these Democrats have gone too goddamn far. You're never supposed to allow the inmates to run the asylum, ever. Everybody is upset. Well, I shouldn't say everybody, but a lot of people are upset with Trump and Musk and Doge and all this. The reality is, it's like the inmates were allowed to run the asylum way too long. And now it's time for a little bit of pushback. And that's what they're feeling right now. They're feeling some pushback that they weren't prepared for. It's easy, like when a child keeps asking a parent for stuff and the parent just keeps giving them what they want. But eventually you get to somebody who's going to say no. And when you say no, that triggers like what are you talking about? No, I always did. It's like, no. You had it too easy, and they allowed you to get away with too much. But no. There's a new sheriff in town. So, that's the reality. It's like this whole thing about the Federal Reserve and interest rates and housing prices and everything. It's like, I really think that this for you people who are out there saving money to buy a house, good luck to you because you're fighting the price of inflation. You're fighting other people who are interested in buying those properties that you're looking at. And you're also fighting the corporations who are interested in buying the property. I think we may be at a point where unless there's some major catastrophe or unless there's some major debt crisis or unless there's some major lending crisis, I really don't think the housing market is coming back anytime soon. Now, I could be wrong. I'll admit I could be wrong. But when you really look, I'm a millennial. We have seen, 3 economic collapses. We saw it in 2001. We saw it in 2008. And then we saw it again in 2020. And the difference was we're so deep in debt now and inflation is so rampant with our debt now that at this point, I really, really don't think that it's going to be that easy for them to do anything about it. I'll say it like this, because, I like to pose solutions. The only way that they could fix the problem that they have right now is that all of this undeveloped land that we do have in these states, they would literally have to do nothing but start building houses. Like all of that space in between like New York and Pennsylvania, that's all that rural farmland and all that. They would have to start building the houses and they would just have to keep building and building and building and building and building. They would have to start building houses just to build houses. Like they'd have to be out there throwing houses up, like where they have teams just building out, like just nothing but building houses. Something tells me that ain't gonna happen. Like I think at this point, like I had heard somebody quote a number. It's like they need to build like 3 million houses like a year or something like that. It's like it's not, that's not gonna happen. That's not realistic. So what will happen is that and by the way, we have a lot of abandoned neighborhoods. We have a lot of abandoned areas in this country where there's like no people and everything. They need to demolish all that shit and they need to rebuild over it. Like they need to build like metropolises in those things, but I just don't see that happening though. I just don't see that happening. So the reality is all these old properties are going to get rented out. Corporations have decided not to build single-family homes. They've decided to go into multi-family dwellings because they make more money. So, I feel like I'm in the catbird seat because, like, I'm, a man with his own house, and I should say his own houses, and I'm lucky in that respect. But I just don't see the market turning around anytime soon. So if you are saving up, keep saving up. Don't let me stop you. Keep saving up your money. And if you're lucky, there'll be some major catastrophe that forces somebody to sell. Maybe they'll get sick or they'll need to retire. But the bottom line is you're waiting on a catastrophe. Just understand, you're waiting for the worst to happen. So other than that, this market is cooked. It's going to be a long time before things turn around here. Not going to make this very long. We had an up week, and then we ended Friday slightly down. The Dow is currently at 43,428. So what are they blaming for that? Let's see. The market should have completely closed, of course, at 4:30. It says the Globe stars and dogs for the week. 10-year Treasury yield drops as traders seek safety from stock market sell-off. So there was a stock market sell-off. It says United Health, Amazon.com Incorporated share losses contribute to Dow's nearly 800-point fall. S&P 500 hits records as traders brushed off Fed signs. That was a day ago. The Federal Reserve, from what I know, has basically claimed that they're going to put a pause on any interest rate drops. That's because I guess they claim that they're trying to fight inflation. It says U.S. Treasury yields were sharply lower on Friday as investors ran for cover in the middle of a stock market sell-off, while concern over the health of the economy grew. The 10-year Treasury yield dropped about 7 basis points to 4.427, and the 2-year Treasury yield was lower by more than 6 basis points at 4.202. 1 basis point is equal to 0.01, and yields and prices move in opposite directions. The S&P Global Purchasing Managers Index for manufacturing came in at 51.6 for February. That was below a consensus estimate from Dow Jones that called for 52.8. Services, meanwhile, contracted more for the month. So if you just take a look at where everything is, you still have Nvidia holding quite strong. You got Google, Amazon, Tesla, all of them are pretty much holding strong. Apple's only down 0.11, so even though it's in the red, it's a small amount. It's not even a full percent. You've got Nvidia down 4%, not too bad, but they're back at 134, so that's good. You have Google down, 2.7%. I'm not worried about it. Basically, it's just a big sell-off for the most part. So there's nothing here that really worries me at all. I noticed Micron was up above $100 a couple of days ago. I'm still buying into Micron stock. Right now, the only place that I really feel comfortable putting my money is credit card stock. Right now, for $1,500, you can basically buy one share of MasterCard, Visa, American Express, and Discover Card, all 4 of those credit cards. So basically what I'm telling you is that for $1,500 input, you can watch that over the next year and see how much money you gain from it, but I guarantee you it's going up. Americans at this point are addicted to credit cards, and they're paying for all of this stuff that they're buying. In some cases, they're just using their credit cards for grocery shopping. So betting on credit cards is a good way to go. You don't have to worry about Americans suddenly waking up and paying off their debts and getting rid of credit cards, or using them wisely and not paying interest by, paying off their balances every single night. You don't have to worry about that. I can guarantee you that's not happening. Interestingly enough, cryptocurrency. Now, if you really think about it, when Bitcoin went over 100,000, you had everybody thinking all of this stuff was going to the moon. That was only like, what was it? A couple of months ago, I think. And basically, this is where it is. Bitcoin is $95,744. XRP is still below $3, 2.561. You have Ethereum is $2,639. Now, everybody got really excited when Bitcoin hit $100,000. You see, the ultimate thing is, it's like, you can invest in just about anything. You can gamble in cryptocurrency. You can invest in dividend-paying stocks. You can choose to do whatever you want with your money. But the bottom line is, whether these numbers are in the green or whether these numbers are in the red, I'm still getting dividend payments from my dividend-paying stock. This is the reason why banks, gas companies, oil companies, and credit card companies are where I choose to spend my money. Where I won't spend my money, interestingly enough, is in the airlines, because the airlines coming out of COVID, I thought that it would be cool if you wanted to pick up some airlines, that it would be okay when the airlines dropped to their record lows. But the problem is, airlines at this point are just a complete mess. It's like, we already understood that airlines weren't going to be profitable anytime soon coming out of COVID. We understood that. That's why I said, you know what, maybe you should shift to oil instead, and you can keep putting money into the oil and gas companies. I also recommended that you put money into the banks. Now I recommend that you put money directly into the credit card companies. But betting directly on these airlines, it's like, nah, I don't think that's probably a good idea at all. JetBlue, as you can see, let's look at JetBlue over just the last month. This is JetBlue over the last month. So JetBlue came from what was a little bit above $8 to $7. So they lost $1. They've lost about $1. American Airlines, oh well, they're not doing very well at all. 18. Now this is just a month. January 22nd. They've gone from 18.68 all the way down to 15.23. Where's Delta? Delta in 1 month. Delta went from, what was it, 68 all the way down here to 60. Ooh, $8. Oof. Landing planes upside down without their wings, yeah, that doesn't really help at all. United Airlines, 1 month. What is that, 109? Oh, man, you're down here to 95.89. Oof. So, yeah, I don't think that's the best way to go. And where's Boeing? Oh, look at Boeing. Oh, boy, 1 month. Well, in fact, you can look at Boeing over the last 2 years. Boeing, $260. Yeah, we're down here at $177. But Boeing's part of the military-industrial complex, so I'm not worried about them. I'm pretty sure Boeing is a decent long-term bet. They don't pay a dividend, so they can forget it. Like, I wouldn't recommend them at all. Well, considering it's Boeing. But gas prices, supposedly, they claimed, were supposed to be going back up. But as you can see, let's see over the last month, if you take a look at the gas prices, or the oil prices, I should say, over the last month, yeah, they're still relatively down. Maybe that is a continuing trend. But consider the fact that you're still going to get paid dividends if you buy into them. If gas, for whatever reason, does spike back up, like if there's unrest in the Middle East, like if there's war with Iran, perhaps, I hope that doesn't happen. But just in case something like that does happen, gas prices may spike again. Banks are right here. These are the banks. Citigroup, Capital One, Wells Fargo. This is over the last month. Bank of America, Goldman Sachs, Discover, Visa, MasterCard, American Express. These are the banks over the last month. I'm not worried about the long term of the banks at all. I'm not worried about it. A couple of things that are coming up. We've got tax return season coming up because people got to pay taxes. You're also going to have people getting their tax returns. A lot of money is about to be pumped into the system. A lot of people are going to be paying off debts and bills that they've accumulated, but they've been waiting to get their tax returns to pay off. I'm not really worried. You know, that's one I have to say, and that because I said I'm not going to make this long. One of the reasons why I love a dividend-paying stock portfolio is because when the market goes up, the market goes down, I really don't care because I'm still getting paid just because the money is sitting there. I really think what you really should do is you should have a challenge for yourself. If you don't have a dividend-paying stock portfolio, you should build one. I don't know where you are. I don't know what you have. But if you could start with $1,000, then start with $1,000 and build a portfolio. Diversify that $1,000 and build a portfolio of dividend-paying stocks. If you can start with $2,000, if you can start with $5,000, if you can start with $10,000. I don't know where you are. The key point is you get dividend-paying stocks in companies that you know, like Coca-Cola, banks, gas companies, oil companies, even big tech. Most of them pay dividends too. Microsoft pays, Apple pays, Walmart, Target. Diversify. I don't know how much money you have. I don't know how much money you want to invest this year. I had an investment target for my dividend-paying portfolio for $100,000. I've already got more than $50,000 in one of those portfolios, and I'm going to keep on building it till I get to $100,000, and that's the goal. So the money will sit there, and the money will earn dividends, and as the dividends come in year over year, I just take those dividends and I buy more stock. For example, this morning I bought more shares in Discover Card, and I bought some shares in American Express. Every single time I get my dividend payments, because they come in over the year, they don't come in all at once, I just reinvest it. And sometimes, I sit back and I look over the money that I have and I'm like, oh, wow, I've managed to save this much money, or, I've managed to accumulate this much, and that's the feeling, that's the thought you want to go to. Now, I understand that there's some people, even with cryptocurrency, and they look at their crypto wallet in the same manner. The thing about it is, again, you don't get dividends off of that. Your crypto doesn't pay you to buy more crypto without you selling what you have. That's part of the reason why, even though there are some countries right now thinking about having cryptocurrency funds, it doesn't make sense because cryptocurrency funds don't pay interest. That's what's so stupid about it. And that's why, the American public in general is not for using American funds to buy cryptocurrency. But the thing about it is, it's like, if America wanted to start a cryptocurrency fund, it really doesn't make sense simply because you don't get paid anything from it. Even the money that we have, as worthless as you believe it is, the money that we have gains interest. US dollars gain interest. Even if we hold foreign currencies, the foreign currencies gain interest. If we hold euros, if we hold pounds, that gains interest. Cryptocurrency does not. So, if that's how you want to invest, if you want to have a crypto portfolio and that's how you want to put your money, hoping that one day that, the Bitcoin amount that you hold will turn into enough to somehow be able to beat the price of inflation, and you'll be able to maybe buy a house or a Lamborghini or whatever it is. Okay, fine, if that's what you want. But the thing about it is, my cryptocurrency portfolio has XRP, And that's partly because we bought it back in, 2018? 2018, yeah, that's about right. Yeah, 2018. And just held on to it, because that was back like when it was easy to just use Coinbase. Because back then it was like me and the dudes at work, everybody was just throwing small amounts of money at Tron and Ripple. And, we were buying Bitcoin. But the thing about it is, it was like you had to watch that shit all night long. It was hard to sleep and everything. And the reality was, if we had left that money and just left it in there, oh yeah, it would have grown significantly to this point. The problem is most people didn't leave that Bitcoin alone. There were people who spent 11 Bitcoin just to buy pizza. There were people who had hard drives where they had Bitcoin stored on it, and they've lost their hard drives, or they lost control and access to the computer. And they just lost, they may have been worth billions of dollars, but they've lost it all. It's really a shame. It's really a shame. But when I think about my stocks, I've never had to worry about losing control or access to any of my stocks. Even when I was at Scottrade got bought by TD Ameritrade. TD Ameritrade got bought by Charles Schwab. Over 15, 16 years, it's like I never lost control of any of my portfolios at all. Like all of that stuff was basically guaranteed for the most part. It was like they made sure that you kept control of your username, password. They made sure of it. So, listen, if that's how you want to invest, bottom line is diversify. Diversify your crypto. Buy Ethereum, Litecoin, Bitcoin, Ripple, diversify. Buy Trump coin. Why not buy Trump coin? Now, Trump coin has lost over $80 billion, I think, since Trump has taken office. But, it's still a strong investment, I guess, because he's still in office, right? In fact, considering Elon Musk is on the case, why aren't you buying Dogecoin? You should be buying Dodge, the Department of Government Efficiency, right? Yeah, you should be buying that. Since you believe in it, you believe in Elon Musk, you believe in him tackling waste, fraud, and abuse. So you should be buying Doggy, whatever, however you pronounce it, Dodge, Dog, whatever. So, just diversify. That's the best thing. So this way, if one thing declines in value, the other things won't. But other than that, there's really not a lot else to talk about. At this point, the only thing I'm buying at this point is credit cards. I'm buying credit cards, Visa, MasterCard, Discover, and American Express. I'm not going to buy any more oil. I'm not going to buy any more gas right now. I'm not going to buy any more tech. My Nvidia I have plenty of holdings in Nvidia and Tesla, Apple, Microsoft, Google because of my index Mangoat. That's Microsoft, Apple, Nvidia, Google, oil stocks. And then after that, it was AMD, Amazon, and then Tesla. But then I add in, Intel, Micron, TSM, and SMCI. At this point, I'm not going to buy any more tech. At this point, I'm just going to buy credit cards. Can't go wrong with credit cards and bank stocks. Can't go wrong with them. So that's basically my plan for 2025. I'm going to invest a solid $10,000 this year. It's just credit cards. That's all I want. I just want credit cards. That's it. So basically, I said I'm not going to keep you long. So that's basically it. So again, if you haven't got a dividend-paying portfolio, you really ought to build yourself one. You need to get as many shares as possible from decent companies, but for as low a price as possible. Now, I haven't heard anything about there being any more stock splits, but I'm anxious to hear of a stock split. I'm hoping Microsoft, or I'm hoping somebody else will do a stock split. I don't know if that'll happen. I can't say that'll happen, but if it does, I'll be very happy to see it. Really, that's about it. That's all I really had to say. Dividend paying stock portfolio it's absolutely the best. It pays you back. It forces you to manage what you're doing. It forces you to like take a good hard look at what you're buying. It forces you to diversify. And in the long run, if you don't ever cash out the money, you can always gift it to your kid. Now your kid has an account that he can add to or she can add to. And, maybe even use it to help finance college. Who knows? Depends how big it gets. But that's all I really had to say. So, hopefully you enjoy your weekend. It is 6:32 Friday, and I'm out.